Renaud, thanks very much for joining us. Obviously you're based out of Paris in the French market for a long time. How do you see at the moment the economic trends there in terms of the general market?
I think the trend overall being quite positive. It's not exuberant at all. I think it's good. It's growing. It's growing at a reasonable pace. We as actors of the economy need to be diligent. We need to be vigilant in relation to the overall risk which surround us around the globe. But France as itself, with our new government, has been making good way towards strong reforms, good reforms, and it's paving the way for, I think, for success for the country, for its companies, and for the real estate market overall, and obviously for its lenders.
And in terms of the real estate markets, what are you seeing there? Because obviously you've got the Grand Paris, you've got those kinds of things coming on stream. How are you seeing particularly the real estate markets at the moment in Paris and France?
I see it quite good as well. As you know, we have been growing quite well since the last crisis. In fact, in terms of investment volume, commercial real estate is about 32.5 billion, which is the second highest ever achieved. You could argue that we all know we are close to the end of the cycle. The question is how we will go back to normal levels, whether it will be a brisk adjustment or it will be a gradual slowdown. I think it's more of the latter, and the reason is the fundamentals of the French economy, like I said earlier, are better. And overall, the perspective for the country in relation to the Grand Paris overall strategy, the Olympic Games, and also the improvement of the overall economy is going to make the readjustment to normal levels quite palatable. So in relation to that, I think the real estate market itself is going to be good. The market is not oversupplied. If you look at the data, in fact, the ratio of oversupply to take up is quite low. In other words, you have limited supply relative to the take up. And it's been effectively improving over the past 7 years. And the second point is in relation to future supply, 40% overall of the supply is already pre-let. So in terms of risks of seeing oversupply, empty buildings, and hence a crisis on rents, that is quite contained. The overall issue though remains overall growth of companies, and hence growth of rents, and then in other words also the impact on value.
As a bank, you're having to think about how you're lending. Are you taking a more defensive approach, would you say, to that? Have you changed the strategy in any way? Or?
It's interesting you're asking this, because this past year the ratio of core plus relative to value-add development last year was 60-40. Historically, it has tended to be about 80-20. So 80% of investment volume was core plus and 20% was value-add development. You are seeing more and more investors taking risk, selective risk on new destinations around the Grand Paris. I'm basing most of my quotes here on offices, not so much on retail and logistics, but we could as well. Ahead of that trend, at Helaba, for the past 5 years, we took selective positions on development financing, on spec developments, on VEFA, on spec VEFA, and quite successfully. There is a transaction which we did for AXA in Châtillon, south of Paris, which got just sold by AXA to Covivio, which we had funded as a development financing project, and that was a great success for AXA and for us as lenders. We got successfully repaid. However, going forward, we are taking a bit of a, not step-back approach, but a slower pace approach towards value-add and development, because we want to manage also our book in relation to the historical positions we had taken. But going forward, clearly, and especially if you look at the other players, the crux of the opportunities are more into the riskier positions. But you really, in France, more than in any other cities, I would say, around the world, you really want to have a good understanding of the infrastructure of Paris and the Île-de-France and the traffic management, because that's really a big factor into assessing the value of the asset.
And we've seen a lot of moves towards particularly some of the niche sectors, alternative sectors. Is that something that your clients are also beginning to move into? Union Investment, for example, has just moved into student housing, so there seems to be more of an institutional approach to that. Is that something that you're seeing from your clients?
Yeah, we definitely do see that from our clients. We are not ourselves active in that space yet. I mean, we're asking ourselves that question, and we are taking a very thorough look as to the trend, because in fact it applies not only into student houses or retirement houses, but even into offices with the trend with co-working. So all this different usage, alternative usage of real estate makes us lenders rethink about the inherent risk of real estate and real estate financing, and how we want to position ourselves to that. But Helaba, being a balance sheet commercial traditional lender, working closely with the German Sparkassen, we tend to have a relatively conservative approach, and we want to make sure that before we jump into that asset class, we really know what we get into.
Great. Thank you for joining us today. Thank you, Renaud.
Cheers.